You
But
hear me? Could you hear me okay?
about me, yeah, I can hear you.
Yeah, perfect. Perfect. Greg had to head out and chase a little white ball around with somebody for a charity event.
Oh, really? He's out today?
Yeah. Yeah, so it's just you and I.
Are we gonna do it?
We're gonna do it, man. We're live right now.
I don't know what to talk about. Let's keep
Well,
it short.
we'll keep it short. We'll do it. First of all, let's talk about who that guy is in the background behind you with the flag above his head.
Derek Sampson.
Derek, man, glad to have you on. He just peeked over. Good to have him on, Derek.
He hasn't been in the office for 2 years, but he's here today.
Good deal. Let me just make sure we're launching. Let's see if we're launching here.
Yeah, I'm doing a conference call for 20 minutes.
Well, cool. Welcome to This Week in Lumber with Matt Beamer. Greg is out today, so Matt and I are going to do what we do best, kind of just BS about what's going on in the lumber business, because what else is there to do today, Matt? I mean,
I don't know.
Like, look at all the phone calls I've been making, looking at the exchange stuff, I'm coming to the conclusion that let me just grab Nick. Hey, Nick, is it working on LinkedIn? Because I see it on the restream, but I don't see it on the actual LinkedIn page. Okay, all good, he said. My question is, so I call people around. We're actively trading some OSB panels. People are looking at lumber, but heard the first interesting thing today from a guy in the Midwest finally saying, hey, yeah, I finally need to buy a little bit of lumber, right?
Yeah.
And I was talking to a guy in Texas the other day that normally buys a large amount of cars every month, but they're running their inventory down, so they're just barely, their contracts are more than adequate for what they have right now, and too much in some cases. But made the comment yesterday, hey, we're trying to clear the decks so we can buy more again. We're getting to that point, right? So I think people sometimes have a misunderstanding of what that means. What that really means is people are trying to get rid of their high-priced inventory.
Sure. Or, in the case of Texas, I think the weather's been an issue. And also, if you look at the stats that we talked about last week, some of the markets that have been the hottest in the last 2 years are the ones that are taking the biggest breathers, like Boise and Dallas and Phoenix, and those types of places that had the exponential price growth. And so, combination of economic factors and weather factors would be the part of the Texas guy that you were just talking about that's not helping him get rid of his high priced inventory. Does that make sense? Whereas the guys in the Midwest and the Northeast are just clipping right along. Weather's been really good, and I think that they're maybe a little bit further along in that cycle of digesting their old expensive inventory.
Yeah, so let's look at what happened. We've been trading off. We're going into as much as I hate to talk about futures, because September is going to expire. Is it the end of this week or next week? And
next Thursday.
And where is the cash market right now?
Right in line with futures. I'd say right around 500. 480 to 500 seems to be kind of where cash is shelled out.
So basically, we've converged on that price, and I think we talked about last week. Most of the backlog at the mill was now unsold inventory. I know in the West it was that way. Maybe some of it's being remedied now. In the East, there's a lot of inventory sitting there that mills are looking to move. It sounds like there's some euro showing up. But with that said, it's all finding a home one way or another, right?
Yeah.
Especially if you have wood sitting on the ground, and you always say this, and it's so true. If you have wood sitting on the ground at a reload and it's ready to go and you can truck it, I mean, I can't say you can name your price, but you can get a premium to the carload delivered 3-week to 4-week market.
I mean, if they need it, for sure. If they don't need it, then you go back to the old Ashley and Matt method of selling trucks at car prices.
Or
like we did back in the 08, 09.
I told you, it was so funny when I first went to work for a company. My boss was like, "Why do you?" He goes, "What's the premium of the truckload market to the carload market?" I'm sitting on a big trading floor that trades oil and gas, where you should just historically think there's a premium, like, oh no, it's about a $20 to $30 discount for trucks in the ground. And he looks at me. He looks at me like, "Wow,
You're
why are you
crazy.
even? Why are you even here?" It's
Exactly.
like,
Right. Yeah.
that's what we've done. So, one thing that you bring up all the time, and I hate to say rumblings of this, but there's talk again about a rail strike potentially coming up again. Um,
Yeah. It's a big one. It's
and
on
it's
Yahoo right now. If you guys want to do some searching on the internet, just do a search for potential rail strike on Yahoo and you'll
still
find the article.
a buddy of mine, this guy Mike, I used to trade with years ago. He just likes keeping track of the different markets and the grain markets. He goes, "Wow," he goes, "it looks like it's a strike where it could be a whole bunch of different rail operators right during, grain harvest and all that." And you've been a big advocate of, hey, rail hasn't improved. The only thing that's improved, the only thing that's proved is some of the demand has pulled back a little bit, which has created an opportunity for things to catch up. But I know you always said if everybody wants to buy it once again in lumber, we're in the same situation shipping as we were 6 months ago, 3 months ago. You pick your point. Does that make sense, Matt?
The railroads are not going to improve. They aren't.
Yeah.
They've come out and point blank said so, right? I mean, they're determined not to hire more people, and they're just going to operate. The business that they've chosen is a lower staff, higher margin business. For them, for their shareholders, it's good return on investment. But for us, the people that need the products, it doesn't help you if you're a farmer and you want to ship some grain, or doesn't help you if you're a lumber mill and you want to ship some lumber, or
Yeah.
if you're a customer of those products, right? I mean, so then on top of that, you now have rumblings that the railroad workers want a 25% pay increase. And there's 115,000 rail workers online that may strike. I mean, I doubt that they will, and I doubt even if they did, I think the government would probably force them back to work right away. It's too
Yeah.
big of a disruption. And this government that we have right now is still, trying to put the pieces together of how do you come out of a pandemic, right? We haven't answered these questions yet. There's still a lot of problems out there. I mean, heck, in California right now, they're talking about rolling blackouts, and as well as I do that the railroads aren't going to solve their own problems, but the change now between say 6 months ago is that there's more trucking capacity again. Now I wonder how quickly that trucking capacity would get sucked up if there was a railroad strike, right? I think that we're getting calls from truckers now for the first time in a long time where, hey, you got any empty loads you want to move? So they're actually, they're slow enough that they have time to prospect and call for loads. But I think that would disappear immediately if there was a rail strike. And then you'd see, trucking rates just go right back up exponentially like they were in March and April and May.
Yeah, so we had that conversation in our morning meeting this morning, just talking about rates, and we were going through looking at what ifs or what's changed. So, for instance, there was an 800-mile haul that went south to north, southern state into the north, and 3 or 4 months ago, that was a $4,800 load. Just looking at the first vendor online was $2,600. Right? I mean, that's the difference right now in freight, and you can pick little points in other places, but it's significantly lower. I mean, fuel's off slightly. We'll see what happens with that after November, but I think we're still in one of those potential volatile situations where this is my opinion. Freight prices like this are going to be short-lived, so everybody should take an opportunity if they want to. And I could be wrong, to take advantage of it and pick off some cheap stuff on the ground if somebody has it. I shouldn't say cheap, just well-priced stuff on the ground. Because right now, I think, Matt, like you, if somebody came to you or anybody in this industry and somebody has something on the ground, mill, distributor, and wants to move something, things can change in a few hours. Hell, we can get off this phone call and somebody can do something different. But people are willing to negotiate right now because the big players are out there are just at probably the 8th or 9th inning of liquidating their inventory.
Yeah.
Does that sound fair?
I mean, I think we've talked about the coming slowdown and the coming change in prices and change in demand since April, May.
Yeah.
I mean, we knew this was going to happen, and I think last year gave us a pretty good example of how severe that drop and how quick that drop could be. So everyone that's experienced the sell-off of 2021 vowed that they would not get caught up in the whirlwind of the same type of sell-off in 2022, and the industry's done a really good job for the most part of avoiding catastrophic losses this time around. And what that really means is the industry's done a good job of keeping their inventory relatively in check. So the difference is this year, as opposed to last year, the Fed is trying to slow down the wider economy, right? Last year they weren't doing that. This year they are, and we have, I think, maybe bigger supply chain problems now than we did a year ago. Maybe not. I don't know. You probably have a better feel for that than I do, but I don't think the problems with the ports have been solved. Do you?
But no, I mean, just from what I see, I think certain ports maybe, but look at what you and I have dealt with before. I think other ports probably are dealing with. Well, first of all, there was a large influx of lumber. Lumber is a little different than just taking a big scoop of sulfur or iron ore and dumping it on something. It takes a little bit more specialty to move it all around, right?
Right.
And what I've seen is a lot of people traditionally in the Euro market moving it off port into inland reloads when it comes in so they can deal with it and they move the bulk off, or
Sure.
just picking a handful of reloads that they want to deal with. A handful of ports that they've had success, because you and I, Matt, your whole infrastructure to company doesn't want to deal with trying to book 10 or 15 trucks and having trucks go in and cancel and all that. And it's life's too short and it's too hard already to do business than to deal with that. Right. But
Yeah, the ports themselves are highly regulated spaces. I'm
for
not
sure.
sure. You and I learned this when we were driving through the port of Houston 10 years ago,
Well, we
right? You
thought
and
we
I,
were just gonna
yeah, we're just gonna go
drive
like, hey, let's
straight.
just go in there. There's a big American flag. Let's go check it out. And they're like,
Yeah.
guys with like, M16s are sitting there staring at us with scowls on their face, going, "What are you guys doing?
Yeah.
Turn around and get the hell out of here, because this is a government-controlled installation. You're not authorized to be here." We're like, "What?"
You're like, hey
I
man,
thought this was America.
I used to be in the Coast Guard. Can you mind if I pull in and come in?
Yeah, they're like,
Yeah.
no,
Yeah.
you're not coming in.
Yeah, but everybody must these ports that this lumber unloads at. I mean, they're unloading cars, vehicles. They're unloading everything that comes into a port in the U.S. is unloading at that port. And then there's lumber sitting there, right?
Yeah.
So people are coming in loading, vehicles from Japan and China on these great big rail cars, and they're loading iron ore and they're loading pulp and paper, and then they've got lumber sitting there. So it's one more thing, and the ports are dealing with the same issue we're dealing with. It's very regulated, and they don't have enough labor, right?
Yeah,
And
right.
and you always say about the workforce timing out. Well, at the ports, it's not much different, right? I mean, they're working with that also. But so what is Matt? I like your perspective from what are you seeing from when you put your mill hat on right now versus when you put your distributor and wholesale hat on? Is there any theme that you see right now that you see playing out that usually you say, oh wow, this is usually a good indication of X?
Well, I've been an observer. I've been observing the market here for the last 30 days or so. And I've got inventory like everybody else in America. I have inventory that I paid too much for, working through myself. So that's been a concern of mine over the last 30, 45 days. Our mills have had to fight and compete for orders over the last 30, 45 days. These are all things that I see every day and experience every day. But then, as a hedger and as a student of futures and trading futures for 25 years, I've been noticing that, when we hit that 470 level in both September and November, it didn't want to go down any further than that. We took several runs at 470 to break it, and it just hasn't gone there. And then here we are today, we're up like 12, 18, and 20 real time.
Yeah.
So that's the first time in a while I've seen some green letters on the future screen. It's mostly been red ink here for the last 3 or 4 weeks.
Yeah.
I think we're kind of transitioning away from um, total desperation from sawmills to a market that's more evenly balanced, where buyers feel comfortable with these prices. They finally have a reason to buy a little bit of lumber. I don't think anyone's going to come in and buy a lot of lumber, but I think just the time of year creates a little bit of an increase in demand, and that's not unusual to get an increase in activity in September and October, November before the snow flies. Not at all. It's actually expected, right?
Well, go ahead, finish, Matt. I'm sorry.
Oh no, I just go ahead.
Well, so it's interesting. Greg and I were sitting around on Sunday. I stopped by his house, dropped him off some zucchini bread, and he was sitting out in his backyard smoking a cigar. So I went back there, and we were just BSing about the market, and uh, we were talking about the stuff you and I talk about. And Greg brought up this point. Um, it made a lot of sense. He's like, what really throws the market pricing off in here is the amount of contracts everybody had in the first and second quarter and the amount of business now. So what's happening now is a lot of big buyers that have contracts had to we talked about this last week about cancellation of contracts. I don't know if people are canceling them as much, maybe in some cases, more than dealing with. That's a large chunk of their business right now. So if you were 60% contracted or 50 in the first and second quarter, that's a lot equal to your outtake now. So what
Sure.
happens is they go to these mills, they quit buying as much in the spot market. And I'm just thinking this out with you. You can tell me what you think. And then when next month comes and they have to do something, they call up a big mill and the mill just says, we'll just add that to your November contract, add that to your December contract. So that market never sees a market price. It gets the print price, which is then a part of all this other contract wood coming on. So you get all these contracts in this particular Q3 that we're in right now, or going into Q4. And all of a sudden you have everybody on contract, and there's not a lot of open market spot wood to set the price of that contract. Does that make
Sure.
sense?
Yeah. Yeah. And I mean, I think that the last 2 years, last 3 years has you can go back to 2018. Just in the last several years, the need and desire for contractual obligations has gone up. And that's primarily because of the volatility of the market, but also the availability factors that we've had people come to us and go, hey, we can't get our wood. Like literally, we've got all these contracts with all these mills and we can't get it. Can you guys get us wood? And we get orders just because we can ship, right? We have wood on the ground somewhere in a reload, or we have maybe better car supply at our sawmills. And so we found as a hem fir and Doug fir producer of Western lumber that some of these markets and companies that you never would have expected to penetrate are now buying lumber from us on a spot basis because we can ship it.
Yeah.
So that grew the contract business for everybody.
Yes.
But with a shrinking economy and a slowdown in real estate, which we also have been talking about for quite a while here, I would think that the retailers' inventory, if they're using 60 days worth of inventory, maybe they'll switch to 40 days. Maybe they'll switch to 30 days. Maybe they'll just start carrying less. And I think the distribution network in this country is already carrying less. I think a lot of distributors have just decided, look, we're just not going to carry the volumes that we used to carry. Sorry, we don't make that much money on lumber. We're better off carrying more siding. We're better off carrying more nails and brackets and things that, other things that they use in the construction process besides lumber and OSB.
So you reload, Matt, at a lot of different locations. I mean, I could arguably say you're one of the biggest reloaders if that's the proper term, distributors in Texas. And especially when you want to get into the number 3, I would say you pretty much know where that market is within a couple dollars every day because you reload so much. Are you noticing any of the people that reload next to you or any of the people that you help support other reloads in the US have a lot more VMI stuff they're selling for people? So wood is still making it to the location. And the reason I say that, I had a person tell me last week in Iowa, maybe we mentioned this, that what he's running into as a distributor, as a regional distributor in the Iowa, Wisconsin, Illinois market is some of these big um, distributors, these large national distributors are getting carload and carload, and they don't have the risk because they're just selling it out in a VMI for they're almost doing the same as the European sellers do to people at the ports. They don't take any risk, so these big mills want to ship carloads into these great big DCs, and then they just let them sell VMI, right? So it's finding a
Sure.
place. Do you think there's more or
I
less
mean,
of that?
that's been going on for years. I don't
Yeah,
think that
it has.
that's any different than it was 5 years ago. Maybe the scale of it's a little bigger now, just because those companies have consolidated and they've gotten bigger themselves, right? The ones you're talking about, the consumers of that product.
Yeah.
And for half the year, they probably don't really like those VMIs, but the other half of the year they love them, right? And so basically, when the railroads are not operating very well, those VMIs become quite important. But when the railroads start operating smoothly again, then all of a sudden they have too much lumber, and that's sort of where we are here, right? We're you just talked about earlier, like where guys like because business slowed down and because maybe weather was a factor, they've got plenty of inventory.
Yeah.
And they might not even own the inventory. Maybe it's a VMI inventory, but they still have this pile of lumber over here that they need to deal with before they even think about buying an extra 5 cars in the open market. But my attitude towards inventory for the rest of this year is I'll probably just carry less. I mean, and not because I'm afraid of market volatility. At this point, they've taken all the guesswork out of it for me. I can buy number 3 really cheap, as cheap as I've been able to buy it in the last 3 years. So I don't care about the price of it. I'm not scared of investing in lumber right now at these prices. What I feel is more pertinent to this discussion is how much businesses are going to be for me to partake in as we go forward with a Fed that's hostile to real estate and housing, and because they're trying to fight inflation. I can just see what's happening. It's going to slow everything down. So if everything's going to slow down, do I need to speed up? No, not really. I think I need to slow down a little bit also.
Great point, Matt. And especially Greg put something out on LinkedIn telling about what the Fed did. And his thought is we could legitimately build less houses at the end of the year as we start slowing than we built in 2021. I mean, we could be there. And with the Fed doing what they're doing, didn't the 30-year almost hit 6% last week? I mean,
Yeah.
it could be on its way to 7%. You brought up something really interesting I want to talk about. I don't think some people actually realize. You said you can buy number 3 cheap. This is one of the first times in the last 2 years where the number 3 in the low grade was really close to on grade pricing for a long time, which
Yep.
means the mill's net is a lot better because the lower grade prices obviously average into that cutting profile. And Matt brought up a great point. What you'll notice now, I don't care whether you're a U.S. species, Southern pine, Canadian fir, or anywhere, that low grade now has kind of come disconnected again, and it kind of drifted back to real low levels in a basis in a real wide basis. So there's not as much takeaway in low grade. It's also Matt and I always talk about, you can tell the turn of a market when everything collapses on the same price. Low grades kind of is wide again. So mill's cost of production is a lot higher now again, right? Because that's a big takeaway. When Matt, you always give me what the profile of a mill is, a Western mill. They're all pretty similar of what they cut in low grade and all that, and that adds into the cost. I mean, does that, and you, like you said, you've noticed it in low grade. What else have you seen in that? Does that make sense what I said?
It's because of yes. I think you're onto something here, that the spread is widened.
Well,
between low grade lumber and number two or standard better type lumber.
yeah,
Uh, and economy is even much cheaper than number three. It just shows you the the slowdown in the wider worldwide, the worldwide economy. So
absolutely.
in years past, we would take this extra capacity economy in number three, and some of that goes on a barge and ships over to Asia somewhere, and it's gone. It doesn't hit uh, a pallet manufacturer's offering sheet. He never sees it. It just goes.
Yeah,
And but that wood's all around now, right? Like there is no real big export market in this world that we're in right now. So we're going to have to solve our own problems. And the only way that that will happen is if mills chip it or don't pull it. I mean, like you could buy green Doug for economy 2x6 sub $100 right now
are you
at a
serious?
sawmill. Yeah, it's going for like 90
That's
for
in,
green
so,
2x6 economy.
so when was that number of that product at that price historically in the past?
Last, I don't know.
Yeah,
It's been a while. It's been a
a
long
long
while,
time.
actually.
What about
Yeah,
what about the market you trade? Number three, Eastern Western spruce delivered to Texas. Where's that market at now?
we sold some today at 490.
So, 490, would you say that that's getting into, well, you used to always have that picture hanging by your desk of what you traded, the high price you traded number three at during your life, which
Those
is,
numbers kind of got blown away over the last couple of
yeah,
years,
it's
but
crazy.
it
So,
used to be 575 delivered Texas was kind of the high end goalpost, and 375 was sort of the low end, right? I mean, once you got below 375 delivered down there, it was all bets are off, right? But then the pandemic shot those numbers up to like 1500 on the high end, 14 something, and the low is where we are right now. So 490 is the most recent low on two before number three. It's probably been 2 years since we were
yeah.
at that price.
So with the new cost of production and all that, do you think we're near investment levels on the low grade right now, like the Texas market? Are we getting there?
I mean, I think we're an investment level on a lot of stuff right
Yeah,
now, but the 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 problem that I have, and which we just talked about 5 minutes ago, is how much do I really want to invest? I mean, in the old days, if I was willing to buy 50 cars, do I still want to buy 50 cars? Nah,
yeah,
maybe I want to buy 20 or 30. I just think that the wise thing for me to do and for most people is to just carry a smaller inventory and turn it more often. You know,
yeah,
we'll see if the railroad figures out how to solve their problems in the winter of 2023, because that's sort of really if you just followed how poorly the CN servicing everybody from say December through May, you know what I mean?
yeah.
That's one of the reasons why we've rallied so hard the last couple of years is because of lack of availability.
We had all the power goes to the grain, moving it from ports to, to different places. So last week when we talked about European mills, and lo and behold, 2 hours after our conversation, one of the mills announced a curtailment in Europe. So
Yeah.
my guess is after we get off the phone today, there's going to be a large push to everybody to buy a bunch of cars number three at the mills.
Who knows, buddy? We could use it. We've got some more cars to sell.
Yeah, well, so what are you what's your game plan for the next few weeks? Are you looking to put some more stuff into reload, or is your mill looking to move some stuff? Are you having success moving some stuff?
I am having some success. I mean, last week was a critical week for me, and I needed to have a good week in terms of volume, and I was willing to trade price for volume, and I did that successfully. I had a really good week, and I plan on having. I had a good day yesterday. I don't know exactly what's going to happen completely today because it's still not even lunchtime here. But I think there's a better tone in the air
Yeah,
all over the country. I don't think it's just here in Oregon or down in Texas. I think everywhere is interested in buying a little bit more lumber right now, and most of the guesswork's been taken out of most items. There are still some expensive items out there. Like, I mean, I sold a car of long lengths the other day for $1,000 delivered. That never used to happen in my whole life. I never sold anything for $1,000 delivered unless it was like some sterling cedar or something like that. You know what I mean? It
yeah,
wasn't commodity lumber.
yeah.
Um, but Yeah, I mean, even and long lengths aren't really a commodity, right? I mean, there's only a handful of mills that produce them anymore. So,
Yeah,
but yeah,
my
no,
feel.
I mean, dimension lumber's gotten wound down pretty hard here, buddy, and so I think the job shipper guys, the apartment folks, they're comfortable with these prices. I mean, you can buy 9-footers below $700 delivered pretty much anywhere in America.
Yeah,
You can buy plate stock for in the high 500s to high 600s. Depends on what kind of quality and tally you want. But I mean, you can get those numbers all day long, and you can buy low grade sub $500 delivered. For number three or utility. These are all pretty good, historically. They're well, recent history. They're great. In historical terms, they're just fine. There's nothing out of the ordinary about us trading lumber at these prices
and
at all.
the multifamily buyers outside of the big chains outside of the big yards. There's been a lot of consolidation among the retail community in the last. We just saw another big one last week with a large trust builder getting consolidated. And as these consolidations happen, you get more groupthink sometimes at some of these places where the leader says run the inventory down. The person that used to own that place that was going, was buying a lot more. It's like, okay, I'm going to do what the leader says, right?
Right.
So what you and I always notice, we talk about it, the independent ones still can see a good opportunity and get in front of it, because when everybody turns and all those big chains decide to when all their flags on their computers flip off at
Right.
once that they have to buy, they all come in and then the market runs away for 3 weeks, right?
Yeah, and I don't know if we're going to have that kind of a year, going into the fourth quarter. It'll be interesting
Maybe
to
not.
see. I think we're going to have more volatility. I think the volatility is going to be on a smaller scale. So instead of 500, 700, $800 swings, maybe we get $200 swings.
Yeah.
But I will be interested as we get into Thanksgiving and Christmas timeframe to see how the railroads are operating again, because that's going to set us up for the first and second quarter of next year, right?
No doubt.
If the railroads can sort of pick it up a little bit, then maybe we won't have the same kind of knee jerk, desperation type buying in the first and second quarter of 2023 as we saw the last 2 years, right? I mean, and that was in response to demand through the roof, right? The demand for housing in these markets. So what's changing going into 2023 is that demand is being pushed down a little bit. What if there's a rebound though, right? What if everybody says, you know what, 6% mortgages don't bother me. I need to buy a house, because the demand for housing is still there. We just cooled it down temporarily.
Well,
But
that can change a couple ways too. I mean, for the most part, people can, in some cases, their input costs are going down on some of the homes. Not all of them, but some of them. They can lower the price of the homes, right?
right,
They can buy down points for people if they're a large builder that has their own mortgage arm. Like you said, overall, historically, 6% isn't a high rate relative to what you and I have been used to from when our parents owned homes, right?
right.
But um, yeah, certainly right now at the price of homes, the big move from 3% to 6% in 6 months is a big deal.
Well, I mean, we're
But it'll
underbuilt as
change.
a country, right? So we've been underbuilt for a while, and we have an aging inventory of homes in this country. So not only is there a need for more housing, but the housing that exists is getting older by the day.
No doubt.
So
And
it's like,
that's,
they're
yeah,
going to start, they're building, they just started scraping all the dirt right down the street from me, where I live. There's going to be, I think, 300 homes built in this complex, and they're going to start out with first phase is like 60 homes. I saw they finally put a sign up on, like right next to the road saying, 8,000 to 12,000 square foot lots, homes starting in the mid 500s. Okay, that's the first anything advertisement that I've seen of actually the developer wanting to start pre-selling the homes. And I'm curious if it's going to pop or not, because in the Portland area, mid 500s is reasonable. Okay,
yeah,
Portland has
that
extremely high we're not as high as San Francisco or LA or Seattle, but we're in 4th place on the West Coast. It's still, I think maybe Portland probably is the cheapest major city on the West Coast, right? But still, stuff goes for 300, 400, 500
Yeah.
regularly. That's not unusual. So, mid 500s for a brand new, pretty well constructed house. This builder is a high quality builder. They're not some crap breather guy that just came in from out of town is going to slap up some junky homes. These are nice homes that they're going to build, and the lot sizes are decent size.
Did you think about stepping in for an investment one?
No, I'm not really into that. I got my investment is my 4 kids and the fact that I got to pay for them to go to college and stuff.
Good point. So. Yeah, no,
that's where my money goes.
I'm interested to see who's going to. Let's stay tuned on that when you talk next time. Let's see how those are selling and hear who's buying them and how they're moving, because that's.
I mean, they haven't even put like the tubes, like the plumbing into the road yet. They don't even have anything hooked up. They're just starting to carve out like streets. It's kind of weird to watch them take a piece of farmland and turn it into what's going to be a neighborhood, and to see it happening real time every day as I drive by.
Yeah, it's crazy.
It's a much bigger project than people realize.
It's insane all the way these people can do this at such a volume.
And they don't waste anything either. They took all the soil and sold it, right? So they got some money for the soil. They pulled all these big boulders and stuff out of the ground. They piled those up. They're going to use those for like retaining walls and
they take the soil and then they sell it back to the people that build the houses on it.
I was amazed at how they pulled every single big rock out of the ground and just set it aside. Like, in the old days, they just send that off to the quarry. No, they're keeping them.
That's awesome. Hey, well, listen, we're up against. I've monopolized a bunch of your time, Matt. I appreciate it, and thanks everybody for showing up. Matt and I will be here next week again. Tomorrow, we got lunch with Lumberman with Matt Lehman. We'll talk about what he's seeing going forward, and then we'll start the whole cycle back over next week. So also just let you know to support us, Matt Beamer, Hampton Lumber Sales. Get a hold of Matt. Matt knows has forgotten more than most people know on forward pricing to large retail, large industrial, large multifamily. He's very well versed and owns a lot of inventory down in the Texas market, especially number 3. Most people on here know him already, and if you don't, you should know him. And we're with Materials Exchange. That's materialsexchange.com, digital lumber exchange. We merged last week with Mickey, and we're already starting out trading some orders this week. So we'd like you to come in and sign up, or go to our website at materialsexchange.com and register, and we'll get you on the platform. So again, everybody, thank you for showing up. And Matt, thanks for your time today. Appreciate it, my friend.
Yeah, no problem. Thank you, buddy. Have a great day.
Yep, you too.
See ya.